Hello, this is Tradesight Stock Market Preview for Wednesday, the 30th of July, 2014. Let's get an update on what to expect here in the next couple of days because there's some mixed concepts you have to kind of get into your head and really wrap your head around here to understand what to expect the rest of the week. So first of all, I will say this: we remain in summer. And that typically means a little bit slower action, a little bit lighter volume, um, things not really following through as much as they could at other times, and also a lot of days where the afternoons just don't get interesting. Tuesday was a little different than that, and we'll cover that in a moment, but you just have to be prepared for that. We have data before the bell. Let me show you all the data that's coming out tomorrow right here on your screen. So an hour and a half before the bell, sorry, 2.5 hours. Who puts out data at 7 a.m. Eastern time? MBA Mortgage Index comes out, not a big deal. 8:15 a.m. Eastern time, ADP employment change. It's an employment number. It can matter sometimes. But the focal point is going to be this 8:30 data. This is the advanced look, first look at Q2, that's the second quarter GDP here in the U.S. The number is currently expected around 3.2%. A meter miss by much can obviously cause a gap. It's a big data point. If you come in right in line, okay, no big deal. But much off of that either way can definitely cause a gap, depending on what the reasoning ends up being. So that usually gets us going. Now, the only other data that we can see for the day is the crude oil inventory is an hour into the market. And then here's the other caveat. At 2 p.m. Eastern time, the results of a two-day Fed meeting, the Fed announcement. Obviously, nobody expects that they're going to really do anything with rates. They'll leave them right where they're at, most likely. Obviously, they could have comments that would indicate something going forward. Either way, that's the type of thing the market will wait and look for. So typically on a two-day Fed meeting, you look at the start of you look at it's a Tuesday, Wednesday meeting. You look at the first hour and a half or so on Tuesday, and then the market dies off, probably just sits, not much action Wednesday morning, all the way until the Fed meeting. Instead, we've got this GDP number, the first look. It's a big once a quarter number, so we could get some excitement early. Whether that lasts long or not will probably depend more on how far off the number is. But the other thing is, let's take a quick look here. I'll come back to this chart in a minute. I just wanted to show you this is the futures, and I'm going to go the 5-minute chart in this particular case on the ES futures from today. And so now you can see like the last 3 days. So you can see last Friday, Monday, and Tuesday. And if you look at the volume at the bottom of the screen, every day starts out with better volume. Obviously, the first 90 minutes, maybe 2 hours, pretty heavy volume. Then it tends to dry up, and then the question is always whether we come back and see any volume in the afternoon session, because that sort of determines whether or not the market goes anywhere. If you go back and look at Friday, look at after 1400 on Friday, you can see that the volume never really picked back up that much until the last bar of the day, and therefore we got a very flat session. We were stuck in a 4-point range on the ES. If you go to Monday and look after 1400 in the middle of the chart here, you'll see that the same thing happened. Volume never came back after lunch, and we ended up stuck in basically less than a 4-point range, or a 4-point range max for the session. Now remember, a 4-point range is just back and forth, silly chop. Nothing's working, nothing's moving. But on Tuesday, yes, the day we just completed, volume did come back, and from that, when that happened, we got a nice sell-off. It gave us a nice opportunity. We were short Baidu. There was some movement in the market. So, you need to see that volume come back. Summer days tend to be more like the first two where we don't see it, but we did get it on Tuesday, and when you get it, you get a move. Now, most of this was news driven based on what's going on in the Ukraine. It seems like the hostilities are ramping up. Might be some shots being fired by the Ukrainian government. That's what led the first drop Tuesday morning, where the biggest volume of the week was, right there for a couple of bars. And then the rumors about that continued in the afternoon, and that's what brought the market down. So against the backdrop of get some excitement for the GDP early in the morning on Wednesday, to slow down because we're all waiting for the Fed at 2 in the afternoon on Wednesday afternoon, we've also got the wild card of everything going on in both Israel and the Ukraine. So it's obviously not a market where you can say with any certainty what's going to happen either way. Obviously, if the violence breaks badly in either of those locations, worse than it already is, you get a negative in the market. Obviously, any kind of ceasefire would be a positive in the market, but it puts us in sort of a news-driven environment. We've seen this before if you've traded with us over the years, and you never know when something like that's going to hit, which is why we keep an eye on futures. But certainly we'll be gauging the response to that GDP number in the morning, and then sitting around. And if the volume holds up, we'll keep trading. But if it dies off early, that means everybody's turning to look for the Fed And then here's the next wild card on the factor anyways, which is that Thursday is end of month, which means a lot of times things slow down. They want to print the statements. They're holding the stocks where they've already got the stocks where they want it for the statements for the month. It's not the end of quarter, so it's not as bad, but it is end of month. And then Friday, of course, is a summer Friday and the beginning of August. Good news is August is typically, even though it's lighter volume, a positive month in the market. We'll see how that goes with everything that's going on in the world right now. It's typically a positive month. And then by September, volume starts to come back in and things get a little more exciting. So we'll have to track all that. Now, here's a quick look at the broad market. This is the ES front month futures, or the S&P 500, whatever you want to call it. You can see the 13 sell signal we had at the beginning of July. In fact, July has been an incredibly flat month. We have been inside of a 40-point range on the S&P for the entire month of July, and that, I believe, is the narrowest month of the year so far. Maybe close in March, but you can look back and see, January was much bigger, February was much bigger, April had a swing down and back, May rose at the end, so it was bigger, June was definitely bigger. So this is, and again, it's a summer thing, this has been the flattest month of the year. If you don't get that move out of the gate I was talking about back at the start of the month, you come into the second half of the year, start of the third quarter, sometimes the funds will get moving with their money, and you'll get a move early, but if you don't get that, you're not going to get much, and we didn't. And we did it, that 13 sell signal, and that finally broke the other day last week. And as I pointed out at the time, the market's really been flat because we had earnings the prior 2 weeks from now, back 2 weeks, and the market just kind of sits looking and waiting for those earnings unless there's something in those earnings to drive the future up or down, and there really wasn't. And so we actually drifted up and broke the pink risk line from that 13 sell signal on the last day of earnings. And so even though that line's broken, I kind of feel like the 13 sell signal is still in place because the earnings are now behind us, and that kind of locked the market in. So I think that there's a better chance that we could see some downside movement here from that 13 sell signal. And remember, the ultimate target of a 13 sell signal is what's called the static trend line. That's the red line on your charts. Now that would be 100 points back from here on the S&P, which would be great for some action and volatility, but we'll see if it actually happens. Let's take a quick look at oil. Okay, oil doing not a lot, but interesting, heading down despite all the stuff going on in the world. That's unusual. And then here's, I think, where maybe the real weak link is. This is the semiconductors. They've been selling off pretty sharply for the last week or so. Not a lot of sign of turn up there. They've got their own static trend line, the red line as a target. Obviously, if they make it all the way down to that red line and keep selling off like it looks like right now, there's no sign of a change, that would lead the rest of the market. The semiconductor is obviously a player there, so we'll be keeping an eye on that. So finally, what's the bigger picture? NASDAQ. NASDAQ has not yet rolled over much, but obviously if the SOX keeps going, if everything picks up some speed, the NASDAQ will have break this trend line. And there's a couple key trend lines. You can start at the low back in April and draw a trend line across all those lows in May, and it takes you right through the lows here in July. So there's a key trend line that we could break just by getting back to like 39.10 on the NASDAQ, and once that's broken, that's going to shift everything. So we'll keep an eye on that. But again, a lot of variables, like more of a confusing next 2 days with the situation in Europe and the situation in Israel, and the big number first, and then the big hurry up and wait for the Fed, and then the end of the month. We'll trade it as we see it. We'll be in the lab helping you try to spot some stuff to do. Just keep in mind it is the summer, so we're not going to blow and do anything that might blow ourselves up in a poorer trading environment. Have a good night.